Welcome to this lesson on employment classifications, where we'll explore how to identify employees versus independent contractors, understand gig work, and review IRS guidelines. Proper classification matters because misclassification can lead to legal trouble, costly back taxes, and lost benefits for workers. An employee works under the direct control and supervision of the employer, while an independent contractor controls how they do their work. For example, a cashier at Walmart is an employee, while a plumber hired to fix an office leak is an independent contractor. To avoid misclassification, businesses should clearly outline relationships, use federal guidelines, and review job roles regularly. The gig economy consists of short-term or freelance work, often arranged through digital platforms. Gig workers like rideshare drivers or freelancers are usually classified as independent contractors and don't receive benefits like health insurance or retirement plans. Companies should define roles clearly and comply with all applicable laws. Workers must understand their rights before entering into gig work. Statutory employees are independent contractors treated like employees for tax purposes. This often applies to certain salespeople. Statutory non-employees like real estate agents are always classified as independent contractors under federal law. The common law test examines the degree of control versus independence to determine worker classification. If a company trains and schedules a worker, they are likely an employee. Independent contractors operate on their own terms. The common law test is a legal standard used to determine whether a worker is classified as an employee or an independent contractor. It focuses on the degree of control and independence in the working relationship. This test is important because a worker's classification affects tax obligations, legal protections, and employer liability. The main question is, does the employer have the right to control not only what work will be done, but how the work will be done? Employee: if the employer controls both the result and the process of the work. Independent contractor: if the employer controls only the result, but the worker decides how to do the job. Factors in the common law test. While different jurisdictions may vary, there are common areas considered. Behavioral control asks the question, does the company tell the worker when, where, and how to do the job? Are there detailed instructions, training, or required procedures? Financial control asks the questions, who provides the tools and resources? Is the worker reimbursed for expenses? Does the worker have the opportunity to make a profit or loss? Type of relationship asks the questions, is there a written contract describing the relationship? Are there employee-type benefits, insurance, retirement, paid time off? Is the relationship ongoing or project-based? Examples: employee would be a teacher at a community college, must follow the school's curriculum, use required textbooks, and teach at specific times and locations. Independent contractor would be a plumber hired to fix a leak, decides what tools to use, sets their own schedule, and is paid for the job as a whole. How to avoid misclassification issues. Have clearly defined relationships in contracts. Ensure that independent contractors truly have freedom in how they perform tasks. Avoid giving independent contractors employee-type benefits or requiring strict schedules. Periodically review worker classifications to comply with laws and IRS guidance. The IRS created a 20-factor test to guide businesses. The more factors that point toward employer control, the more likely the worker is an employee. The first 5 factors focus on control over how work is performed and whether the employer dictates the process. 1 is instructions. Does the employer provide step-by-step guidance? 2nd is training. Does the employer provide training for specific methods? 3rd is integration. Is the work key to the business's core operations? 4th is services rendered personally. Is the worker doing the job personally? 5th is hiring and supervising. Does the employer control who assists the worker? The next 5 factors consider time commitment and location of work as indicators of an employee relationship. The 6th question is continuing relationship. Is the work ongoing and not project-based? 7th is regarding set hours. Does the employer set the worker's schedule? 8th is about full-time requirement. Is the worker working full-time for employer? 9th is the work done on premises. Is the work completed at employer's location? 10th is about the sequence of work. Does the employer decide the order of tasks? The next factors focus on financial aspects like who provides resources and covers costs. 11th is about reports. Does the worker required to submit regular updates? 12th is regarding payment method. How is the worker paid? By hour, week, or month, by project? 13th is about expenses. Does the employer reimburse worker expenses? 14th is looking at tools and materials. Does the employer provide tools and supplies? 15th is regarding investment. Does the worker have little or no personal investment in equipment? The final factors involve independence, risk, and termination rights. 16th is about profit or loss. Does the worker realize personal profit or loss? 17th is about multiple employers. Does the worker only serve one company? 18th is regarding services to the public. Does the worker advertise services to others? 19th is about discharge. Does the employer terminate the worker at will? And 20th is regarding worker termination. Can the worker leave without liability? Misclassification harms both sides. Employers face legal and financial risks while workers lose benefits and protections. Regular audits, clear contracts, and proper training are key to compliance. Here's a final review of the 4 main classifications and their responsibilities. Employee works under direct employer control. Example, cashier. Employer must provide benefits and withhold taxes. Independent contractor controls how work is done. Example, freelance designer. Employer issues 1099 form only. Statutory employee, independent contractor treated as employee for tax purposes. Example, life insurance salesperson. Employer must withhold Social Security and Medicare. Statutory non-employee, always treated as independent contractor. Example, real estate agent. Employer only pays contracted amount. Correct classification protects everyone by ensuring compliance and fair treatment.